This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 1/15/2021. This is show number 190. Well, Nick, this morning the indices started out a little weaker, and now the weakness has turned into major selling.
Yeah, we got some pretty good selling across the board. Right now, you have the Dow down about $253. That's only a decline of around 0.8%. But the Russell 2000, which has been the market leader, and just yesterday I said it's overbought, it's extended, it's stretched. Today it's pulling back by about 1.7%. So a pretty good decline there. The Nasdaq, which was stronger earlier, that was in positive territory, has now rolled over, and that's down 0.7%. And then you have the S&P 500 spiders down about 0.8%. So we are definitely looking at a bit of a weaker trading day today, and the volume trends have picked up. So that's the first thing I take a look at. So while some of the volume today could have a lot to do with options expiration, it's definitely a noticeable pickup. Right now, the spiders are trading about 38 million shares already. And again, for a morning hour, within the first hour, that's pretty good volume. Some days we don't trade 36 million shares by the entire day. So we're definitely seeing volume pick up here.
And you've mentioned that 100 million shares in a day on the spiders is significant.
That's right. You break that 100 million share marker, which we're on pace to do today, that could be a little bit of a tell. You always got to get a follow-through day. You always got to get some more. But we're definitely seeing an uptick in volume today, and I think it's worth taking note of. And we'll see where we finish the session.
Mm-hmm. Will they jump in at the end, the Plunge protection team or whomever, the president's group on working markets or whatever they call it these days?
The working group, yeah.
The working group on markets. Will they pop in before the end of the day and hit the buy button on the futures?
Yeah, that seems to happen quite often. But there'll be a day where they can't do it. And the market is much, much bigger than people really understand. And sometimes when time is up, as W.D. Gann would say, time is up. And I'm not sure if that'll be today, but it's definitely noticeable. And even yesterday afternoon, we had a nice bearish pattern trigger. It was called a head and shoulder top on an hourly chart. That signaled a move on the spiders down to 372. On the futures, or I should say on the S&P cash index, that takes us down to around 3720. So that'll be pretty interesting to see if we get down there today.
All right. Interesting indeed. And we can't emphasize enough options expiration, big factor at this point in the month when markets move, but there could be something that it's kind of like obscuring a little bit, I guess, is what you're saying.
Yeah, I'll say this much. I'm never the one that can tell you the story. I don't know the story, but I'm pretty good at knowing the charts. I've had pretty good success with the charts in my life, so I stick with that. But I never know, what the media narrative is going to be for the sell-off or anything like that. If you were watching CNBC this morning, I mean, they were roaring bulls. They just wanted to buy everything. They loved Taiwan Semiconductor's earnings last night. They love JP Morgan's earnings this morning. So again, that's why I follow charts, because the story is just for the land of make-believe on television.
Yeah, look where it got them, right? So earnings, we had JP Morgan kicking off the earnings season today.
Yeah, so today earnings season really kicked off. JP Morgan had a couple of other financials, but that's the most notable one. So next week we'll start to get flooded with earnings announcements. It's always a time to be cautious if you're going to hold a stock into earnings, which I do not do. But a lot of people like to do that. It's a bit of a gamble. And again, earnings season has kicked off today, and we'll start to get a lot more earnings coming out and companies reporting next week.
Hey, we saw retail sales down 0.7%. I don't even know how they calculate retail sales anymore, Nick, because everything's online. What is retail? Online retail?
It's a good question. It's a good question. I've given up looking at that stuff a long time ago. If you notice, we never really talk about about any of the CPI, the PPI, retail sales. We just skip it because really the chart will tell you everything you need to know.
Yeah, it's just fascinating how these indices come and go for close to 100 years, Nick, or since the Great Depression.
Yeah.
After the Great Depression, we started this massive statistical state, administrative statistical analysis. That's what we've seen. And these indices have been really the focus of attention of most economic analysts, stock analysts, investors for going over, 90 years or 85 years. And now they've just lost all relevancy.
Yeah, I'll tell you, when I first got into this business, and I was a young kid, now I got some age on me, but when I was a young kid, I got into this business, I would look at all of these readings, and I would say, wow, if this is such a bad reading, markets are going, and I couldn't make heads or tails out of it. I said, it really makes no sense. And I'm a pretty analytical guy. I can, look at trends and I can figure things out. And that's really what got me involved in the charts, because I said, this makes no sense. You can report something bad and the market goes up, report something good and the market goes down. Sometimes you report something good and the market will go up with the news. I couldn't make heads or tails or tell what it was going to be. That's really how I gravitated towards looking at charts and patterns. And as I say all the time, the charts are the footprint of human nature, and that's really what we want to follow.
Yeah, and it served you quite well over the years for sure. Hey, let's look at gold and silver. They're getting slammed today. I mean, gold down $15 the ounce. We'll see if there's some kind of flight to quality before the end of the day. Silver down under 25. It certainly fits the thesis of options expiration.
It does. And in all fairness, as I've said on here, almost daily, the gold needs to do a lot more backing and filling. I ultimately think we're going to see gold futures getting to the 1700 handle. Right now, if you look at gold futures, we're at around 1832. So we probably got another 100 points down to go. Then you start to look at it as a more attractive play to the upside. But all gold is doing is working off that parabolic run that it had in August. And, that takes some time. It doesn't get worked off that easily.
Hey, what about cup and handle? We seeing that formation yet in gold?
No, I mean, I'm not a big cup and handle guy just because there's so many handles. There's so many saucers. That was a William O'Neill pattern really from the Investors Business Daily, which is a very good publication. But nobody really knows where the handle is. Nobody could tell you what the handle looks like. So what I like to say is look for the markets to have an ebb and flow of moving up, consolidating. When you get that consolidation completion, they can move up again. Same to the downside. They move down. If they make a bearish formation or consolidation, they're going to go down another leg. And that's really the way I like to look at it. But, I could never tell. I looked at the cup and handle so many times. Nobody knows where the handle is complete until it makes its move. And that's too late. So again, I've thrown that one out the window 20 plus years ago. But right now, when I look at gold, I mean, if you just take a look at a monthly chart, which is something I've told everybody here to look at, we went up, we made a move down. Now we're doing another zigzag up. Now we need to do another leg down, and then it'll be complete. You'll get a buying opportunity.
Yeah, I'm kind of with you on that. I do like the wedges and pendants. Those you can see, ascending, bullish flag patterns and bearish flag patterns, which we're kind of seeing now in gold.
Yeah, I mean, right now, when I look at everything, for me, it's very mathematical. I look back at the past. I see where the breakouts took place. Those are things I like to look at. But a lot of times you get traders, they look at, an ascending wedge, a descending wedge, a triangle. These things break out only to break back down. It's very difficult. I try to simplify all of that stuff and make it as easy as possible. And it's still not easy. It's a humbling business. But that's how you have to look at it. You have to just put the charts to work and let the market tell you what to do. And when it's time to strike, you just go with that market and don't hesitate.
Yeah. So the final analysis is let the market guide you.
Let the market guide you, but more importantly, know the patterns when they're going to make the reaction. So I think that's first and foremost.
All right. Well, I think we'll leave it at that. Hey, go take a look look at inthemoneystocks.com, see Nick's extensive trading record, take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Send us your emails, your comments, kl@kerrylutz.com. Nick, have a great weekend, and we will be back on Monday.
Yes, sounds good. You do the same. Have a great weekend.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.